Hey, gang, this is Carl White, and you are listening to the Author Showcase. And what we do on here is we interview the authors of the most recent episode of the Scotsman Guide, whether it be the residential one or the commercial one. Today, we're doing the residential side, and we're interviewing Brian Vieaux, who wrote a great article called The Big Bad Wolf. And it was in the October residential side. So, Brian, first of all, coming from Detroit, beautiful place. So good to have you here, my man.
Yeah, Carl, thanks for having me. I'm excited about the conversation and was pleased we were able to contribute to the Scotsman's Guide.
You know what? There's some. So neither you or I work for the Scotsman's Guide. Obviously, we work with them.
Right.
Aren't they an awesome group over there?
Yeah, I can't remember a time in my mortgage life where I didn't have, the Scotsman Guide on my desk on the corner or off on my side credenza. It's been an awesome resource. The people there are great, and I love the value they provide and the information they share with our industry.
Yeah, it's such an iconic resource for the industry for years. And like you said, as long as I can, I've been doing this for decades, and as long as I can remember, and I had to pinch myself the day they were kind enough to reach out, and we had this idea to do these podcasts. It was like, man, it's like a full circle, So super cool people. So be sure to go look. Our listeners here, be sure to go look at the online resources over there on the Scotsman Guide website. So all right. So Brian, you wrote an article called "The Big Bad Wolf." Dude, so what's the article about? And kind of give us a 30,000-foot view of what this was about.
Yeah, so really what we were trying to talk about was, you've got as in the audience is exactly who you would think it is that are subscribers to the Scotsman. It's folks inside of the mortgage industry, and maybe even narrower, it's what I call the front line of our industry, which is the mortgage advisors that are serving local communities and consumers every day. They're under fire. They're under, attack, if you will, from big fintechs, big tech, if you will. And so probably get in trouble for naming names. There might be sponsors, but there's big brands that consumers have access to every day for different kinds of financial tools, whether it's, Credit Karma for understanding their credit situation, or Mint.com for budgeting and goal setting, or Rocket Money for spending analysis, and then some of the real estate platforms. All great tools, very useful at the core for consumers. But at the end of the day, the consumer who's in the tool is being monetized on the back end through this technology, and it's a path to disintermediate that local mortgage advisor. And so what we talked about in the article is some of these big tools and how lenders of all size, originators of all size, can play in this space, by partnering with some more nimble fintechs, so that they can be part of the solution that the consumers are looking for in terms of these digital tools. But we and myself in particular, I'm of the mindset that technology alone doesn't solve all the consumers' problems. It's technology and people. And as it relates to home buying specifically and home financing, it's never been more important, especially in this type of environment, for consumers to have a trusted resource to lean into. And that, to me, is the mortgage advisor today, is still that best trusted resource for financial education as it relates to home ownership. So that's the crux of it, was really around how we as frontline originators need to be thinking about the big tech that's out there, and how we can provide our customers tools that are similar but keep them kind of in our ecosystem at the same time.
Man, you're a man after my own heart, because I've always thought, there's kind of two schools of thought. There's the old school, and then there's the tech-driven loan officer. And I've often thought that both of them are really missing out, that one without the other is a two-legged stool.
Right.
And so in the article, you talked a little bit about the, customer for life model, and we throw that cliche around all the time. What are some tips, or how can a mortgage professional achieve this in a tech-driven tool, a tech-driven world?
Yeah, so I'm going to get to that in maybe a roundabout way because I want to go back to your comment around kind of the tech driven loan officer or mortgage advisor. I talk a lot about, or we as an industry talk a lot about the next generation home buyer. So said another way, first time home buyers, younger millennials, older Gen Zs, that growing population that's sadly right now stacking up because there's not enough inventory and we're faced with affordability challenges with the interest rates. But the next generation home buyer is truly a digital first consumer. I mean, many of them, were given one of these when they were 2 years old to keep them entertained in the back of the car when mom and dad were driving them wherever they were going. So these are native digital, consumers. And so if you're going to face off with the next gen home buyer, you better have the mindset of a next gen mortgage advisor. And so this is where I think old school meets new school, where you can have and provide the tools, the digital tools that those consumers really expect. But the advantage, to me, the advantage of the old school, and I'm mid 50s, so I was an originator back in the early 90s before there was any technology and all that.
Yeah.
I actually think there's a segment of originators who have a lot of practical experience that have done this through many cycles that bring a ton of value to the next generation home buyer. And the next generation mortgage advisor is not just a young loan officer in my mind. It's a loan officer of any age that's leveraging technology. And so what we talk about in the article, and this is somewhat connected to FinLocker, but there's other products out there as well that can serve this. But if you align yourself as an originator with a set of technology tools that consumers are going to use up the funnel as they prepare for home buying. So those are, the credit type tools, like I mentioned with Credit Karma, and the budgeting and tools that look at a consumer's, financial picture and help them understand and give them confidence, at the point of sale when they're applying. And that's another thing that's interesting about the next generation of home buyers is the younger generations have this kind of this fear of judgment. And so they want to know with a lot of confidence before they go do something that they're going to be successful at it. And one of those somethings is, applying for financing on a home. And so if you have a set of tools that allows your prospective clients to kind of get confident and get educated, and you're also along that journey, helping educate, you'll earn the right to win when they do become, ready to buy. And so that's kind of what we talk about in bringing the old school and the new school technology together.
What would you say are some of the potential risks that come with relying heavily on the big tech solutions in the mortgage industry? Like, is there, maybe there's not, is there such a thing as relying on them too much?
Yeah, I mean, I think one example is, how many home buyers today, first time home buyers today, have their day job, and then they have a handful of other, side gigs, if you will, to
like being an Uber driver in addition to their normal job. Mm-hmm.
There's, as far as I know, those situations, which they're not the edges anymore. They're probably, somewhere around a third of those transactions have those kind of scenarios. Those aren't as well served and just solely in a technology solution. And that's where marrying tech to a degree with that, that seasoned, experienced, technically proficient mortgage advisor can kind of fill in the gaps. Because the risk is you could get a false positive, get all the way down the path, and then the thing blows up because you've only had this side gig income for 3 months, and it's been sporadic, or all the things that could trip up, a deal at the last minute.
Yeah. I was cruising through something the other day, and somebody was offering a service of you never have to do your videos or your messaging ever again. We'll do it all for you. And I thought, I don't know that I want somebody else giving my message, because I want
Right.
it to be, I want my message or my marketing to be about me. And so they want to do business with me, not my company, but me, and have a personal touch to it. And I think
I agree.
there's a fine line in there. So I think it's using like that. What advice would you give to a mortgage professional that maybe they've been doing this for a long time, and it's like, hey, Brian, man, I've always done it myself, and I'm still using a fax machine, and I'm a little tongue in cheek.
Yeah, yeah,
They're resistant to adopting the big tech solutions in their business. What would you say to that person?
yeah. You warned me. We were PG, so I guess I can't say what I should say. But no,
Yeah.
they're if you're going to connect, if you're going to have a business that's focused on first-time home buyers, and maybe it's not exclusively on first-time home buyers, but if part of your business is going to be on first-time home buyers, you have to embrace tech
Yeah.
at some level, because your target customer, that's their expectation. And so unless you're just going to live on past client, product referrals and things of that sort, you're going to miss out on a segment, because they're just, the expectation of that younger generation is that you have some layer or level of digital, competency.
Yeah.
So, my what I've been talking about a lot on LinkedIn and with a lot of our clients, I talk about this on our podcast, is um, this generation of old school originators, um, again, have been through a lot of cycles,
Yeah.
and because of that, they have knowledge that nobody else has, right? And I think we owe it to this next generation of our industry and the next generation of consumer to share that knowledge. And one of the best ways to do it is just like what we're doing right now, is talking into a camera and talking about, scenarios that you're faced with today, and marrying that to what happened 15 years ago, kind of draw the parallels, but then show the positives of, you're still here, we're still here doing this despite going through, what we went through in the meltdown and all of that. So I think you have to embrace technology, and everyone's walking around with one of these. So right, wrong, or indifferent, we're all embracing it in one way or the other, and turning this thing around and just talking into your camera for 30 seconds about the knowledge you have in your in your field, and sharing that with an audience, I think is super powerful. I think it's where the next generation is learning today. They're not Googling as much as they're going to TikTok and YouTube to learn, right?
Yeah.
And so that's where we need to be if we're going to build that audience.
Yeah. Yeah. I remember, I can't remember exactly when it was, but not too long ago, that something happened for the first time ever in the history of mankind. And that's where there were more hours of video consumed on a mobile device than the TV in the living room.
Yeah.
And so now when we embrace the technology, and you, as you're listening to this today, you're the one that's on that mobile device on your customer, you're now equal to Nike, McDonald's, Apple. I mean, it's really the mobile device has just been an equalizer. Whereas before you'd have to be on CBS or NBC and go into a big studio, and the expense of that. So, hey, you mentioned in the article that there's a new standard that us as serving the consumer, that they're judging us, they're judging our performance, their customer experience they get from us with the amazing likes of Amazon and Google, which, boy, that's a high bar. It is. It's a high bar. So how can mortgage professionals help ensure that they're matching the experiences of these giants like Amazon and Google? Because that's the new norm. You have to treat me as efficiently as Amazon does, or I'm out.
That's right.
How do we do that?
That's a good question. It's the $1,000,000 question. And I think one of the ways we do that is by recognizing that each of us is a consumer, because there's probably nobody listening to this podcast that hasn't made a purchase on Amazon or or done some searching on Google. So knowing how that experience compares to the experience that you deliver to your customer, that's, to me, that's always step one, is just being having self-awareness, right? It's one thing to say Amazon is the bellwether for service, but you need to be able to put into context, does your service at least measure up, right? And not every mortgage company has the budget of an Amazon. In fact, there's probably only one that frankly does.
I don't.
I know I don't. And so I think that's where it becomes super critical for companies and originators to find partners that have components of the experience, and to be able to put those components together, but always be the consumer. You always have to kind of put yourself into the experience that your customer is going to go through. So to me, it's aligning yourself with partners that have some nimbleness, have some chops as it is in the unit, the UI, UX, the customer experience. But first and foremost, it just starts with just putting yourself in the shoes of your customer, and go through the process your customer is going to go through, whoever your customer is, and wherever they're falling into that experience. The other place that I think about Amazon a lot is the point of entry. There's a bunch of different ways to get into Amazon and do things in Amazon. And for a long time in mortgage, we only had one way in and one way out. And consumers are seemingly starting their process in a bunch of different places. Some are starting in the real estate search experience, and others are truly starting where I think they should be starting, which is with financial readiness. But you have to be prepared to bring them into your ecosystem at different entry points.
Yeah. What do you see? I've always early on, I was a little hesitant to marry up for the big tech, because I kept thinking one of these days they're going to squash me, as Mr. Wonderful says, like the cockroach that we are, right? So that they're going to work their way in and go direct, consumer direct themselves. And boy, it really seems like they've really struggled with that, much harder than I would have originally thought, certainly, 10 or 15 years ago. Like, what do you see? Like, what's the most significant barriers that you see for big tech entering the mortgage market directly? What's been the holdup for them doing that? What put me at ease here?
Yeah, I mean, I think we saw it. We've seen it happen at scale in certain markets, like certainly in the pandemic induced, now what we would call artificially low interest rate environment, where refis were the product of the day. Those transactions are, if it's a simple rate term refi, salaried, borrower, that's a pretty simple manufacturing process.
Yeah.
And that's much easier for a consumer to do, for the most part, online, if you will. And so we saw, some large players kind of grow into that in that time, that have since shrunk pretty rapidly. Because when the market pivoted to a mostly purchase business, and a purchase business that was highly dependent on first-time home buyers, as we already talked about, there's a little more hair on those deals, and these aren't experienced financial consumers. These are first-time home buyers. In a lot of ways, this is the first biggest financial transaction they're making in their life, and so it just has some more complications that can't just be processed online. I believe that's why we're seeing Rocket Mortgage expanding by hiring, I think I saw 500 local based mortgage advisors. There's a reason for that.
Boots on the ground.
That's right.
Yeah.
And,
I'm sorry, go ahead.
No, I was just going to say that, and part of it is still the model still has a dependency on the referral source. The real estate professional still part of that, referral chain, if you will.
Yeah. I saw a stat the other day. 67% of all purchase loans closed with the loan officer the real estate agent recommended. So I've always thought, as look, big tech can do some amazing things, right? And I've learned a lot from them. And I agree with you that, marrying myself with them at some level is a good thing to do. And I'll just always do so they're amazing at some things. And frankly, some things are not. And I'm not going to try to beat them at their game, because that's like trying to throw a ball better than Tom Brady. I can't speak for you, but probably I'm going to, I'm not a threat, but I'll play a game of chess against him, so I'll do the thing. I'll do what big tech can't do, which I think, at least so far, is relation stuff. Yeah. So, what do you see as the next big innovation or change in the mortgage industry influenced by big tech? Any big things on the horizon that you see?
Yeah, I mean, I see, and we think about this a lot at FinLocker and some of the other technology players that are in and around our space. We think a lot about this reality. At some point, each of us as a consumer will be walking around with our, financial DNA, thumbprint, QR code, whatever you want to call it, already here, right? And so if there's a world where I'm walking around with all of my credit verified, which is not too far-fetched, all of my asset data. So let's say I have 3 main asset accounts and I've got them directly linked to an app, and so they're always verified, right? I always know what's the current balance. And then I can do the same with direct to source payroll data. Essentially you've got this concept of a digitally verified consumer on 5 dimensions: identity, credit, assets, income, and employment. And you name a financial transaction of any sort, mortgage all the way down to personal loans, you have all the data needed to make a decision as a lender based on that direct source data. So I don't know when that happens, by the way. It's probably, still a decade away when that becomes like a reality where you can scan your QR code and the lender just ingests all your data. But that's where we're going. And so it's as a originator today, I think about, my focus is on building the largest database I can build, where I'm building trust with that database and leaning in and leveraging, becoming that financial education's resource.
Yeah.
So, I think it's going to be this confluence of digitization of a consumer's financial thumbprint, but also there's still a lot of questions, especially that younger generation first-time homebuyer has throughout the process. So at some point, I think the role of the originator changes, and we are really the educator and the preparer, and then all the other stuff's going to be just digitized, and that's going to happen in a digitized process.
Yeah, bro, I think you're dead on. I couldn't agree more. Hey, I see we're here kind of heading toward the top of the hour. Give me a couple takeaways. So, and I'm just an open-ended question. What would be, I don't know, the top 1 or 2 takeaways for the loan officer that's reading your article, or the next step after reading your article? Give me a couple takeaways.
Yeah, I don't know that this came out directly in the article, but I talk a lot about this, and we already hit on this a bit. But you as the local loan officer, and that's another thing I want to talk about, is I think being more of a mortgage advisor, to me, the loan officer is like a technical term for getting a loan application through closing, but the mortgage advisor really, to me, talks about a lifelong relationship that a real estate finance professional has with a consumer that maybe starts a year before that person buys their first home, and you're that first source of education. So, I firmly believe that the mortgage advisor with the biggest database wins. And so how do you have the biggest database? You got to go find ways to add value to your community. And one way to do that is through financial education, financial literacy, home ownership preparation, and become that trusted resource that then gives you a right to win inside your database, and it also sets you up for what the market's going to give us at some point, which is a couple opportunities to take advantage of some rate drops where we're going to get some of that free refinance money again. But you got to have a database to do that, and building it today when it's a little bit slower, while intuitively maybe hard, it's the right thing to do.
Brother, man, this has been a great interview. I love it when I interview with somebody that I 100% agree with in all aspects. That's just, I learned long ago, early in the game, I learned I'm not in the mortgage business. I'm in the database business.
Yes.
And I just happen to be databasing mortgages, but it's I mean, you look at like Apple and Amazon, they're a database business. That's all
database. That's right.
Yeah. Apple doesn't make anything. They just make a big database, and then, or Amazon, they don't make any of that stuff. They just have the database and they get a good piece of the share because they're in the database business. So absolutely brilliant. Hey, Brian, kind of wrapping things up here. You work for a company. You're a chief operating officer over at FinLocker. What do you guys do over there?
So FinLocker, we've built a consumer-facing financial fitness and home ownership app that it's a white label solution. So everything we do is on behalf of our client, who's typically an enterprise, lender, bank, or credit union. And we essentially arm our clients and their mortgage advisors with this digital experience that they can point at up the funnel to those first-time home buyers. So when I talk about those early names that we talked about, the Karmas and the Mints and the Rocket Moneys, one way to think about it is we've built the Rocket Money, Mint.com, Credit Karma experience for everybody that's not Rocket, Credit Karma, or Mint. And we essentially arm our clients with this digital set of tools that they can reach, assist, engage, and nurture early journey first-time home buyers to a place of readiness. And then because the way the tools built, when someone becomes a homeowner, now they can link their property, which becomes oftentimes their largest asset, link their mortgage, which is also their largest liability. And now they have a complete picture of their financial life. And so we do extend the engagement with a consumer for our clients beyond the transaction. So we're not one of those apps that kind of, blows up as soon as the loan closes. We kind of live well before through the preparation stage, and then well after from an engagement perspective.
Very good. And if somebody wants to get more information about the article, or maybe some suggestions on things, is there what's the best way for them to contact you?
Yeah, so I'm pretty active on LinkedIn, so you can always follow me, Brian Vieaux, on LinkedIn. Go to FinLocker.com. I've got a podcast that I publish there. I would love to have you on, Carl. That would be fun to kind of turn this thing around on you a little bit. But yeah, go to FinLocker.com. Check out Brian Vieaux on LinkedIn, and I think my LinkedIn, I'm pretty brave. I've got all my contact information there. So if you follow me, connect with me, you can get to my contact info there.
Outstanding. Brian, thanks so much. I appreciate you being here, and great information for our listeners. Every week we bring you great information, and we ask for one thing, and that one thing is forward this episode to 3 of your friends. Turn 3 of your friends on, of your loan officer or mortgage professional friends, on to the Scotsman Guide. We really appreciate it, and as always, we appreciate those great reviews. So on behalf of the gang over at the Guide, my name is Carl White. Thanks for being a part of Showcase the Author, and we'll see you on the next episode. Thanks again, everybody. Bye-bye.